Hi, my name is Scott Reynolds. I'm the team leader of the Reynolds team, and I have a very special guest here today. He's kind of like Realtors' best tool. It's Wesley Davis. He's the county appraiser.
Property appraiser.
Property appraiser. And man, I appreciate you coming so
pleasure.
much.
My pleasure.
We use your site, our staff, our team, and our buyers use the site. And I know there's a lot more to your job and accomplishments than the website, but it makes all of our lives so much easier. So thank you.
My pleasure. My pleasure.
I just wanted to, take a little bit for those that may not know you. How long have you been the county appraiser?
I've been the property appraiser since January 5th of 2019. I was appointed by then Governor Rick Scott.
Okay.
The former property appraiser died while in office.
Okay.
And therefore what happened is there's a certain period of time in which the governor can appoint, or if it happens in a certain period of time, you just leave it vacant until the next general election's coming up.
Okay.
So basically it's a 2-year period, and this was within that 2-year period. So therefore the governor got to appoint.
Wow. I can just tell you, as being an agent here in this market since 2005 was when I moved here. The website right now, and it's just awesome.
Thank you.
Like the tax records, the deeds, everything is like right there at our fingertips.
I try to make it to where you only have to touch it once, even whenever you're looking for information on a piece of property. You don't have to type it in and then click it, and then you just type it in, push enter, or it goes.
And like Joanna pulls the tax deeds, from when the agents go on the listing, and they pull the deeds so that we know the people that we're dealing with. Whether it's in a trust or an estate or if we got the right people.
Basically, those are important. That's information you need to know.
Right. Exactly. Who's on the deed?
Yeah.
One subject I did want to talk about, because I don't think a lot of people, they may know about it, but I tell you, a lot of the sellers I meet with and I talk about it is the tax portability.
Okay.
And for those that don't know what the tax portability is, it's, you know what? I'm going to let you explain what tax portability is.
So what portability is portability is only on homes that are homesteaded. So if it's your homestead, then you may have portability. And when I say may, this is important to understand. That you have a market value or a just value that we put on that piece of property, and then you have an assessed value that we put on that piece of property. We do this for every piece of property in the county. And the reason that we do that is because the assessed value is what you pay your property taxes on. That is your ad valorem, that's what your ad valorem taxes are based on. So the difference between the market value and the assessed value is what they call portability. Now, how you accumulate that portability is if you have a property that's been homesteaded for a long time, and let's say you bought when blood was in the streets in the real estate market, let's just say 2010, and now you're looking at this time right now of selling that property. The value of a homesteaded property, the assessed value, can only go up by 3%, or the consumer price index, whichever is less. So this is the first year of me being in office when in fact we used the 3% figure because inflation was so over high and the CPI was so high that this is the first year that I've been here that we used the 3%, and we'll use it again next year, obviously. But prior to that, the other years, it was like only 1.4%, 1.7%, and that is the maximum that your assessed value can go up by. Well, clearly in this market, if you have now, going back 5 years, where the assessed value over that 5-year period went up less than 10%, we've seen a real estate market where it's gone up to 30 to 35%. So that difference in the market value and the assessed value is your portability.
So that's I try to explain it to customers. It's almost like I'm probably explaining it the wrong way, but it's almost like a bank account that they're accumulating over time if they've been there and the values have went up. Yes. And it's savings.
Yes.
And they can port those savings to the next property if they're buying it, and it's you can port 100% if it's above the price that's
almost correct. The difference is portability is capped at $500,000.
Right. Right.
So,
Okay.
so that's why I stopped a little bit short of saying you can port 100% of what you have.
As long as it's less than $500,000.
Right. And the other part of it that is in the event that the market value of the property that you're buying is equal to or greater than the market value of the house that you're selling, then you can take 100% of that portability.
And for those that maybe not know about it, so I mean, I could just talk about my own personal experience and my own personal home that actually I called you about, and we have a tax portability of $265,000 that we're going to be able to port to our next home.
Yes.
And we bought a home that's more expensive than the home that we were in, and so I'm gonna be able to take whatever the assessed value is of that, and then you subtract what that, in this example, $250,000, and
The market value.
market value.
Yes.
Okay, not the assessed value.
But that will be your assessed value then.
Right.
Because whenever you take the market value less what you port, that'll be your assessed value.
Got it.
Is how you figure that
The
out.
assessed value is what you're taxed upon.
Correct.
Okay.
Yep.
All right. So the market value is the one we're tinkering with.
That's right.
With the subtraction.
Now, so let's suppose in the scenario let's run through it. I've gone through the scenario where you have 100% of the port. That is, market values are the same. Therefore, you take everything across.
Right.
Let's say that you buy a condo or a home where the market value is half of the home you're selling. Then you can only port half of that to your new property, your new homesteaded property, and that you just apply that up and down the scale. And you have go ahead.
No. You go ahead.
And you have up to 3 years to do this.
Right.
So let's suppose that you're selling your house and you sold it this time of year, and you decided to rent because you wanted to build.
That's our world.
Okay, and and many of you may remember that it was on the ballot, not this last election, but the election before that.
2 years.
Yes, it used to be 2 years.
And you guys got it extended.
Extended to 3 years, mainly because people were having a hard time building a home in that 2 year time frame. And so they were losing their portability. So that's why that was, and because it's an exemption that was provided through the state of Florida's Constitution, it took a constitutional amendment. That's why it had to be on the ballot in order for that to happen.
But in my example and others, anyone, like we bought our home in 2011 and we sold it in 2020, I'm losing track of time, 2022.
Perfect.
And
you could have timed that anybody. You should be in the real estate business. That's brilliant.
But we got to go, we also bought in that market too.
Okay, all right.
So,
yeah.
But it was, in my own personal home, I'm not trying to time the market. It was like something that we wanted to do. And so, but that $250,000 in everyone will have a different number, but over 10 years, we were able to save that based on the just value going up. But that's like real money.
Absolutely.
Like every year.
Yep.
That's like in your pocket. And it's just money that I'd love to pay, but it's money that's going to taxes.
The rule of thumb is on the high end, but the rule of thumb is 2% of the value is basically what your taxes are going to be. That's on the strong end. So you can come down to 1.76, but just the easy figuring. And so if you take that 2% based on that $250,000, you're looking at $400,000 or $4,000.
$4,000.
That's a boat payment almost if you don't get a small boat.
On the tax portability, there's an adjustment, a possible adjustment.
It could be. And going back and remembering that the portability, the value of the portability, that deferred amount is the difference between your market value and your assessed value. So it may be prudent for a seller to call my office and ask them, I would like to maximize my portability. Can you look at raising my market value? So that way it would increase the delta between the market value and the assessed value, and that's the dollars that you can port to your new property.
And the important thing with that some people may not know, sellers may not know, is the market value has no effect of their tax rate or their bill. So I don't want them to be paranoid thinking they'll raise their tax bill.
It won't, because remember, what your taxes are based on your assessed value, not your market value.
Right.
And therefore, we're not touching your assessed value. All you're looking at doing is increasing the difference between the market and the assessed, which will increase the dollars you can port to your new property that you're going to homestead.
We were able to do that. We were able to adjust our market value.
If you don't mind me asking, how significant? 20,000? What?
It was actually 165.
Was it really?
Yep.
Good for you. And that's not. If you think about it, that's not anything different because you've been there since 2010.
Yeah.
And the market from 2010, when blood was in the streets, you remember, I mean, you couldn't make a real estate commission if you tried.
It was tough.
Oh gosh.
I mean, we're just talking numbers. So we bought it for $285 at that point,
Right.
and we sold it for $650 11 years later.
Good for you.
But the market value was, at the time when I called the office or whatever, I think it was like $100,000. You know, $100,000 above. It was like $330 or $340. So I knew the market value was off.
Sure.
And that was just a nice conversation with your office.
Yeah. And again, we're, you know, if you there's an exemption that you're entitled to, we want to see to it that you get it.
Yeah. Nice. Thank you.
My pleasure.
I know it's probably hard to get this out to everybody, and it's just like for any, and you don't have to buy, you don't have to live in our local area. If you lived in Miami, it's for the whole state, right?
Brilliant. Absolutely. It's if you had a homestead anywhere in the state of Florida, and you are moving to buy another home anywhere in the state of Florida, you might be eligible to have this portability.
Right.
And let me explain when I said it was up to 3 years. The reason why it's up to 3 years, let's say that you sold your home in December of last year, so just 3 months ago, you had already burned 1 year because it goes by calendar year.
Okay.
So all of 2022 is gone because you sold in December. Now you only have all of 23 and all of 24 that you have to use the port by. Let's say you sold it right now, though. Here we are in January. Well, you have all of 23, all of 24, and all of 25 to be able to port back.
I think that's awesome though. But I mean, you should be able to buy your home, finish your rental, or build your home. That 2 to 3 years should give you, because the old way with 2 years, if you were, you know, you'd probably cut you short a little bit because of the calendar year, depending on which month you were on.
That's exactly very good point. Yeah. So you could be looking literally under the old system. It was up to 2 years, but it could be as short as 13 months.
So for the viewer out there that maybe don't know all the nuts and bolts of it, when they see their bill, it's called Save Our Homes, right?
Yes.
Which is like a weird, just me. I know I'm sorry, I'm tapping on the microphone. So under Save Our Homes, that value is right there, and that's money that they, as long as it qualifies in the circumstances that they're buying, that's the money that any user here in Indian River County, or actually for the state, it's right there. That's the dollar amount.
And you can see that on your trim notice, which you can go to my website and then scroll all the way down once you type in your property. And you'll see the trim notices there. When you click on that trim notice, it'll have that Save Our Homes. And the reason why they call it Save Our Homes, that was the name of the constitutional amendment that made it so that you could it created the whole thing called portability. Yeah,
because it was, my understanding, it was like I call them like the, older people that have been in their home 20, 30 years, that lived all their life in this home. And then, values taxes have gone up, but they've been capped really low. It gives them their best chance to be able to, if they did buy something different, to be able to port some of those savings that they have been.
You're right on. You're close to the peripherals of it, but really the crux of it was simply this: is somebody that lived on the ocean that lived there for 40 years.
Right.
They could not afford to sell their house because the taxes of the new property, even if they moved into a condo, would be more than their oceanfront property that they had homesteaded for a long period of time.
Okay.
So they were kind of boxed in, and this allowed them to be able to sell their house and still pay the taxes on the new house.
Okay.
And if they wanted to downsize.
Right. Okay. So, and then a few last questions on the portability. When is the person that's getting their statement? So it's every trim notice that's updated, or after 1st of January?
Yes. What happens is right now we are in January right now, and from between now and March 1st, we call it exemption season.
Okay.
And that's when if you haven't to apply for a homestead, apply for any of the exemptions that are available through the legislature, as well as any, like if you bought an agricultural piece of property for your agricultural classifications. So now you have till March 1st. Then after that, then we have the period of notifying those that may be denied their homestead by us because we don't have the documentation,
right,
or they just weren't in there by December 31st of last year.
Okay.
So those are the requirements, and it must be their primary residence.
Right.
Now, primary residence doesn't mean they live there for 6 months and a day. It's not a timing issue at all. primary residence is, where do you get your mail that says that for your voter's registration, for your driver's license, your automobile registrations. So that establishes your primary residence. We don't care if you live there a day. But where do you get your, where do you vote? Do you vote in a precinct for that, where that location is?
I just learned something.
Yeah,
from the county's perspective.
From the as far as for the homestead.
Yes.
Yeah, it's not a time issue.
Okay.
It is an issue about all those things start to establish that property as your primary residence.
Okay.
And your primary residence goes back to, where's your voter's registration say you live? Where does your driver's license? When you get mailed your automobile registration.
There are, and then so you made. We'll link up a link for tax portability for, this is for anyone that you just currently own your home and you just like to know so that when you do, because a lot of people when they're looking at taxes of other homes, it would be good to know kind of how much you could save. And even though those values, I know is a whole different, the values will change.
Sure.
So
yep.
What about exemptions?
Okay.
There are a lot of exemptions that I don't think a lot of people know about.
Without a doubt. In fact, probably the easiest way to learn of all the exemptions.
And real quick, for some people don't know even what exemptions are. Exemptions are you establish a value and it subtracts it from the market value.
Correct.
Which lowers your assessed value.
Yes.
Okay.
Those are your exemptions. And so the probably the easiest way to find out about all the exemptions that are available is to go to the homestead application on our website online, and if you scroll down through there, it'll ask you additional exemptions in like, for example, if you're a widow or widower, there's an exemption for that. Right now, it's not a lot of money, but there was some talk about it last year in the legislative session from moving it from $500 to $5,000.
Okay.
And the one certain thing that I feel confident saying is these exemptions will never go away; they'll only get larger.
Right.
So go ahead and apply for them.
Right. Okay.
There's veteran discount, the disabled military discount, the blind, paraplegic, quadriplegic.
And then below certain income levels.
Oh yeah, and this year, if your household income is it's around $35,000 or less, then there is and you're a senior over 65, then you have what they call a low income senior exemption. Which
can be good where, like, if somebody, now, can you add an exemption after you're homesteaded, like when the circumstances?
Yes,
okay.
Yes.
So like if someone, at first was they had good income and then they retired and then they're living, off Social Security.
And it's not assets, it's not net worth.
Right.
It's income.
Taxable income.
Yes, and so, but we have people that normally what we ask in that instance is just bring in a copy of your tax return. We run it, just let us see what your gross income was. Yeah. And then sometimes there are people, especially in that income situation, they don't file taxes, and so in that instance, what we'll ask for is their Social Security stub. Just show us that, just so it shows us something that we can have as far as backup. Right. Whenever the Department of Revenue asks us, why do you grant this as exemption? We can say, well, on this, based on this. So.
Nice. Yeah. So what else might I might not know about that maybe it'd be good to.
Let's talk about the trim notices. Those are very important.
Okay.
And what happens is statutorily, the trim notices, I have to mail those out I do it about the middle of August. But I have to mail them out and give 25 days for people to respond back to those trim notices. And on the trim notice, it says, this is not a bill, do not pay. We don't want people to think that's right. But so many people, whenever they see that, they interpret it as saying, do not read, throw away.
It's my favorite statement to get, though. It says, like, don't pay.
Don't
All
pay.
right.
Yeah. But what happens in that's where we have put value on the property for this year, for that year. And keep in mind, taxes are paid in the rear, so this is going back. All right, so you will get that in August, but we're looking at it from looking in the rears from right now to 2022.
Yeah, so the trim notice that will go out this year will be for
last year.
For last year.
That's right. That's correct. And so, but what you need to look on there is, first of all, make sure on there will be the exemptions that you're getting.
And so your homestead,
your homestead, military, widows, widowers, any of those, it will be on there. If they're not, they need to call us and let us know. And then secondarily, look at the values. If the value doesn't look right, let us know, because we do make mistakes. There has been a time that somebody had a home in the fingers, and he was just looking at his taxes or his value, and he noticed that his was just about $100,000 more than the rest, and he just really couldn't figure out why. Went back through there, started going back through it. Well, we put $10,000 on there for the value of an improvement, versus $100,000, an extra zero versus $10,000.
Wow, okay.
And it was a mistake.
Yeah.
And so that kind of stuff happens. But then on the flip side of it, if we say, okay, well, we think we're right and here's why, and you say, no, I think I'm right and here's why, and then we're going to say, okay, well, here's your options. And this is important.
There's a public body to go.
That's it. That's called the Value Adjustment Board. So after that 25-day period, that's whenever your opportunity to object ends.
Right.
Then what happens is you file for the hearing at the Value Adjustment Board. It's $15. So it's not a lot of money. And then the significance of that is that gives you the opportunity to present your side of your case to an independent third-party special magistrate to hear what you have to say. And we'll present in the event we disagree. Most of the time, we come to an agreement.
Right, it's settled before it even has to go to that.
Oh yeah, very few of them go to the Value Adjustment Board. But in the event, there are sometimes whenever it does go all the way, and we're just my staff feels like they're being fair, and if they did anything differently, then they think it's unfair to the rest of the people of any River County, kind of thing. So, you present your case to the special magistrate. The special magistrate makes a ruling, and I don't get offended by any decision that the special magistrate makes. And the reason why is because that gives me the backup to say, whenever they say, why did this person get this 30% reduction in their value? We say, the special magistrate did it. So then all they can do is say, okay. So.
Well, I mean, I know it's a big job with however many property owners and parcel, and it's done every year. And there's one thing I was going to ask, because I know there's a lot, and you may not know this off the top of your head. So how many Indian River County residents are there? Meaning
there's
doors?
165,000 is the population according to the last census.
And that was like
2 years ago.
Okay, so 165,000, and that's people that, whether it's second homeowner or not?
They don't even have to be homeowners. That's people.
People.
Population.
Oh.
So
okay, so
renters, 4
occupants and a door, or that's 4.
Yeah, and
okay.
Yeah, if they rent, they're not a property owner, but they're still people that live in River County in the population.
So there's 160, as of 2.
Sure.
Okay, cool. Because I've used, I've kind of been off the cuff for a while, and so because it's kind of hard to find when you have the city of Vero Beach, and you have have the unincorporated area, and you have the same thing with Sebastian, unincorporated area there. So it's all right, cool. Thank you.
No problem. No problem.
We're gonna put up all of your we'll put the website up there and maybe your office contact information.
Please, yes.
And
something you also may want, and I don't know when you plan on doing this, but there'll be stuff that after you see the website demonstration, you'll want to add to that.
Okay.
To add to this for people that want to view and learn more about it.
Yeah, what's really nice about Wesley, before he was a property appraiser for the county, he came from the real estate business for how long?
20 years.
So it's really, really nice as a practitioner to have you in your role, because you're looking at it from the lens of, you can't help, once you're in this business, you always look at.
I do. You're right. Once you're in the business, what's going to make it easier?
Yeah.
What's going to make it? What makes it to where it's a seamless process to be able to get do research on property, get a listing pulled together with the correct legal descriptions and.
Yeah, and the having all of that information and all the work that you've done to help us, I absolutely love it. So he's coming to our office. We're working on a schedule, get him in some tricks and trades of the website for our real estate team. So man, I appreciate you coming out.
My pleasure.
Thank you so much.
I enjoy this. It gets me out of the office.
Nice. Yeah. If you have any questions or anything that we can do to help, feel free to reach out. All our information is below, and thank you very much.
And if you have any questions about the website or anything, they want to give
absolutely.
me a call.
Yep.
The office number is 772-226-1469. 226-1469.
Thank you.
My pleasure.
Thank you very much.
Thank you. That was fun.